Welcome back to Mrs. Royce's Accounting Lecture Series. What is required of this lecture on Chapter 10 of Accounting for Sales and Cash Receipts is that you are required to take notes. Please write down anything you feel is important and that you need to remember and reinforce, and also answer any questions that I ask during this presentation. It will be very important when we do a review for the first 5 minutes of class that you're ready to go and answer the questions. So let's get started. In the last chapter, I want you to think about what did we learn. And I want you to write this down in your notes. Make a list. What are the things that we learned in the last chapter? And if you can't remember what the title of the last chapter was, that was Accounting for Purchases and Cash Payments. So tell me what we've learned. Okay. So I'm hoping, and I know you did, because each and every one of you is so smart, and we worked very hard on learning these concepts. We learned how to journal and post transactions for a merchandising business. Now remember, merchandising business sounds like a huge thing. It's just a business that sells products to their customers. That's all it is. So what we learned is we learned about a purchases journal. And the purchases journal kept track of exactly what we bought. We needed to do that. Kept track of who we purchased the inventory from, who we owed if they let us purchase it on account. Please write down in your notes what you think on account means. We are going to discuss more of that in this chapter. And then we discussed how we paid for the inventory. How did we pay for the merchandise? Well, we paid for it one of two ways, either the on account or with cash. We also paid with cash certain expenses and petty cash, and we learned how to do that too. So hopefully that was on your list. The larger businesses uses that subsidiary ledger to make things easier to post to the ledgers. This concept is not going to go away, especially not when we're accounting for our sales. And we also learned how to replenish the petty cash fund, which is very important. In this new chapter, we're going to learn the accounting piece for when we sell the products that we purchased. So we learned last week how to account for the merchandise that are coming in, and now we're going to determine how to keep the accounting records for when we sell the merchandise. And then how do we know what to charge for it? What price do we choose? So that's what we're going to learn in this chapter. So that's the next question. How does a business decide what to charge its customers for an item that they're selling? How do they do that? How do they choose? Well, first you have to look at what you paid for the item, which is the cost of the merchandise. How much did you pay? You certainly can't sell and stay in business a product or an item for less than what you bought it for, because you need to make a profit. Businesses are in business to make a profit. So businesses have to look at how much that they paid for the item. They have to do some market research and say, okay, I paid this. This is kind of the going rate in the market. Where can I fit so that I can still make a profit? So they have to look at what's called a markup. And a markup is the amount a business adds to the cost of the merchandise, what they paid for it from whatever vendor they bought it from, and then they had to establish a selling price. Now you have to take into consideration the expenses too. Think about what accounting looks at. It looks at sales, expenses, costs. All of those things go together. Now, let's take off our hat of, yep, we're purchasing it. We've got a great price for it. We've put it into inventory. We've done all the accounting for it. We've got this. Okay? Now, when you're selling to your customers, so you're behind the counter, you're selling to your customers, how do you get paid? What two ways can you as a business owner get paid or collect payments from customers? How do you think you get paid? Perfect. Cash right away. Yep, that's right. Cash, checks, credit cards, those things all seem to go together. And what is the next way that businesses can get customers to get products? There's the on account again. That's right. Instead, you are giving the customers credit and you are giving the customers time to pay you back for the merchandise that they've purchased. Okay, now you're the accountant. How do you think businesses who have a lot of customers, who have a lot of people that owe them money on account, how do you think they keep track of all these transactions? Let's say you have 50 customers who constantly have an on-account balance. What as an accountant is the easiest way for you to keep track of those customers that owe the business money? I know you've got this. What's it going to be called? Of course, you all got it. It's an accounts receivable ledger. So what do you think an accounts receivable ledger looks like? Well, of course, it's going to be a subsidiary ledger. And I want you to really look at this image, because what it shows you is that in the accounts receivable ledger, it will list all of the different people that owe you money, just as it did when it in the purchases ledger. It showed all the individual vendors that owed you money. The accounts receivable ledger is the same concept. It is the same thing. You create individual accounts of people that owe you money. You sit there and you add it all up at the end, and then you transfer it into the big ledger account under just one transaction. Now I want you to notice the accounts receivable ledger. These are not vendors, these are customer accounts. So Belk and Jensen, we have given them a customer account of 110, and they owe us $1,752.18. And we add up what everybody owes us as it shows on this, and then we will end up posting it to the accounts receivable ledger. The accounts receivable ledger is the controlling account. That is where the big number goes. Please, if you have any questions about this concept or how this works, write it down in your notes and ask me tomorrow. So if you look at everything, and is an accounts receivable an asset or a liability? Perfect, you're right, it's an asset. So when these people owe us money, that means that it is debited. It shows that this asset is there for us. We own this, even though it hasn't been paid yet. This is a way to keep track of who owes us what and how much money is out there. Now, when they pay us that money and they don't owe us anymore, that's when the accounts receivable account will decrease. So think of it this way. Belk and Jenkins, and this is a sample of a journal transaction, paid cash on account $1,752.18. How would you write the journal entry for that? So then you ask yourself, in, what comes in, and what goes out. If they paid cash, cash is in. Oh, this is awful. Which is your debit. And then what is not owed anymore is the accounts receivable. And that's what you take out. Please, again, if this does not make any sense, make a note. So, just as before, when we had an accounts payable ledger form, and we had individual vendor accounts. Now what we're going to have is this says customer. We are going to have individual customer accounts that will keep track of the amount that's owed. When the amount is owed to us, is it a debit or a credit balance? Perfect. You're right. It is a debit balance as is shown here. So if you look at the subsidiary ledger form, you've got your customer name, the number that is given. Again, the balance that's through. It is a debit balance. As you notice also that there's the same column headings in both the subsidiary ledger, which is in blue, and the accounts receivable, which is at the bottom. So how do you think the businesses keep track of the sales and what everybody owes us? Well, if you are looking straight at the screen, you can see that the answer is a sales journal. Sound familiar? To keep track of our purchases, we used a purchases journal. To keep track of what money people owe us, we use a sales journal. So a sales journal is a special journal. And there's that term, and we had that on the test, I believe. It's a special journal used to record only the sales of merchandise on account. So let me ask you this. Do we put cash transactions in there if they paid cash for it? If the customer comes in, pays cash for the light bulb, do you? No, you do not. A sales journal is only used for the merchandise on account. Okay, so let's look at what a sales journal looks like. This is a sales journal, and I want you to see that it's titled Sales Journal right there at the top. Again, in our transactions and in our descriptions, we're going to need to add a page number. So the page number is going to go here. Again, date, account to be debited. Again, debited why? In. We're going to need a sales number. We always deal with post-reference later. And then look at it. Because it only records sales of merchandise on account, you're going to have accounts receivable debit. Then there's sales credit. And then, ooh, this is new, sales tax payable credit. So now we're going to have to start thinking about sales tax and what sales tax means. But let's first look at an invoice and see what an invoice looks like. Since we did the source document problem at the end of Chapter 9 and we had a chance to look at invoices, look at cash receipts, and look at those things and then be able to put them in and journalize them and ledger them, I wanted to put up another sales invoice and let's go over it. So the sales invoice for this shows, and we're using 3 green products, okay? Now, this is our invoice and that's why our name is there. Well, apparently we gave credit to who? Who does it say? Yep, Wells Apartments. Our invoice number is $498. We did it on November 4th of the current year. Apparently, Wells Apartments is what account number? Yes, the 160. And we've given them terms too. Do you remember what terms were? Terms in terms of purchases, when someone gives you a discount on something, we are also going to offer that to our customers to encourage prompt payment. So the terms of this is 210 net 30. Does anybody remember what that means? 210 net 30? It means they will give you a 2% discount if you pay within 10 days of the date of the invoice. And that is your discount. And if you don't, then just the total amount is due of the $481.77 within 30 days, which would be December 4th. So if Wells Apartments decided to do that and take the 2%, write down in your notes and figure out what 2% of the $481.77 would be. Did you figure it out? Let's see if you got the same amount that I did. I got $9.64. That would be their savings. $9.64. Because we want the money right away in 10 days. So in addition to the discount that was there, now there's something else that's written on this invoice that we haven't really talked about before, and that's sales tax. So we're going to do that next. So what is sales tax? Does anybody know? Sales tax is a tax on the sale of merchandise, products, or services. That's what a sales tax is. How do you think you calculate sales tax? Where does it come from? How do we do that? Well, you take the item price times the sales tax percent of the state that you're in. And each state in the United States has different sales tax percentages. For example, in New Hampshire, they do not have sales tax. So when you go there and buy products or services in New Hampshire, you don't have to pay sales tax. What about Connecticut? Does anybody know what the Connecticut state sales tax is? It's 6.35%. So in addition to business owners doing all these things, we also have to think about taxes. So think about this. When it comes to our customers, who pays the sales tax when they buy an item from us? Is it us or is it the customer? Yep, you're right, they do. You as the customer are responsible to pay the sales tax. But my next question is then, how does the government get that sales tax from the sale? Who collects it? Do we as customers, when we buy something, take that 6.35% and send a check to the government? No, you're right, we don't. So who collects it? The businesses collect it. So that's another thing for accountants to have to think about. How do we do this as accountants? And that's what we're going to go through next. Let's take a look. So let's take a look at a typical sale on account. So we are 3 Green, and on November 4th, we sold our merchandise and products to Wells Apartments. Nice. The sale was for $454.50. So then we had the sales tax, and they're going to tell us what the sales tax is. We don't have to figure out the percent, which is nice. So the total sale was $481.77. And of course we have that sales invoice number, so we can always reference and go back and look at the document, the original document, if there's any questions by us or the customer. So how do you think that this transaction is going to be recorded? Well, first of all, we sold merchandise on account. So when we're getting money in by selling merchandise, it's going to increase our accounts receivable. Now, so this is shown here. Our accounts receivable went up. Okay? Then what happened? Did our sales go up? Yes. So here is our debit and here is our credit to show that the accounts receivable went in and the sales for that went out. Okay? But these two numbers don't really equal, do they? The 454.50 and the 481.77 doesn't balance. And remember, our debits and our credits always have to balance. So as we've done in the past, we have to do an entry that shows not just in two pieces of the in and the out, but you're going to have an accounts receivable, a sales, and then a sales tax payable. What do you think that account means just by the title of it? Exactly. This is an account where we have to send the sales tax to the state. We can do it at the end of the month. Total of the sales tax payable, and we send them a check. Because did we collect the money? Yes, we did. We sold the $454.50 to Wells, and they paid us the sales tax, so we have to send it in. So this is what the sales journal is going to look like. You're going to put your date. You're going to put who purchased the stuff from you, the merchandise, your sales invoice number, the total accounts receivable debit, because that's the total amount that you gave them credit for, even if it included the sales tax. Then you have to include, well, what part of that was my sales? Because we have to know that, remember, for the income statement. And then we also have to keep track of the sales tax so that we can send it to the government, because they don't really like it if you don't send them their money. So this is what a sale on account would look like in the sales journal. So now we're going to look at posting from the sales journal to the accounts receivable ledger. And there's definite steps for this. You write the date in the column on the customer account. Do you see the customer account? If you look at Wells, you can see that they had a balance from the beginning of the month. So you write the date the 4th in the customer account column. Then you write the sales journal page number in the post reference column. That way if there's ever a question, we can go back and look. And it says S for sales journal, page 11. The third step is you write the amount in the debit column of the customer account, which is the total amount that they owe us, which is the $481.77. And then you add the two balances together. Why do you add them? It's a debit and a debit. To show the new account balance that Wells Apartments owes us is the $2462.27. Then we also have to refer back and put the customer number as the post reference number to the sales journal. That way we know that if we're looking at the sales journal and it says post reference number 160, we know that we can go to that account and there it will be. It's just another check system. Just as we did in the previous chapter with the purchases journal, we're also going to have to total and rule the sales journal. So if we look at this, this is 3 Greens customer accounts for the month of November. And it looks like they have quite a few people that owe them money. So to go and total and prove it, you want to go ahead and do the single rule line there, because remember, everything has to be consistent in accounting. The date is, we do this at the end of the month, so we're doing it on November 30th. For the totals. You're going to want to total each column. The accounts receivable debit column, the sales credit column, and the tax payable column. Please make sure that when you do this, that the sales credit column plus the sales tax payable credit equals the accounts payable or the accounts receivable debit. These must balance. This is what went out. This is what's going to come in. The final phase is posting totals of the sales journal to the general journal. That's the whole point of this, is to make everything easier. So you look at the totals from the sales journal that we just went over before. You have your accounts receivable debit for your $9,021.23. As you notice, the account number is written underneath there. If you look at the accounts receivable in the general ledger, that account number is 1130. So you post that date, follows down the 30th. You're coming from sales journal page 11. It is a debit. you debit that account, and then the new balance for the accounts receivable account is $22,042, because all of these customers owed us how much money? Yes, the $9,000. So this has to be posted into the accounts receivable journal, and it's done in one entry, so we do not have a lot of those little entries. Remember when we did purchases, we didn't want a lot of little entries. It's the same way here. The next thing we have to post is the sales credit. Why is it a sales credit? Because we made the money. So in sales on November 30th for the month, $8,637.50. Those were the sales. That's the actual amount of money that we made. So for 3Green, if you look at their total's pretty good. $493,000. Again, see the account number 410 referenced here. Now the next piece, because since there's 3 amounts, we need the 3 journal entries and we need them to balance, we have to make sure the government gets their money. So on the 30th, again, we post the $383.73 into this account number because it's a payable, and we owe the government $383.73. We're done. We will go over this in class. I hope everything goes well, and I will see you tomorrow. Thank you for listening.